Are you haunted by the feeling that something is missing, even amidst abundance? We're constantly told to chase the next acquisition, the bigger house, the faster car. But what if the true luxuries are already within your reach, buried beneath layers of comparison and fleeting desires? Consider this. Studies show that people in the wealthiest 1% report higher levels of anxiety than those in the bottom 20%. This isn't about lack, it's about a fundamental disconnect from the sources of genuine well-being. In this video, we'll explore 5 often overlooked luxuries, not material possessions, but profound human experiences, and ask, are you truly using them, or are you letting them slip through your fingers? Let's start with time, the luxury of mindful moments. In our fast-paced world, it's easy to feel like we're constantly running out of time. We fill our days with tasks, appointments, and endless to-do lists. But what if we intentionally carved out space for this isn't about having more hours, it's about being present in the hours we have. Think about truly savoring a cup of coffee, not while rushing to your next meeting, but while noticing the aroma, the warmth, the quiet moment. Or taking a walk without your phone, simply observing the world around you. Their success often stems from strong leadership skills and a relentless drive to achieve their financial goals. They understand market trends and are adept at navigating economic cycles to identify investment opportunities. Their capital often comes from active income generated by their business and strategic investments in real estate, stocks, and bonds. They value resourcefulness and are constantly learning and adapting to changing market conditions. Then there are the inherited wealth holders. This group's assets are passed down through generations. While they don't have to build wealth from scratch, they still face challenges. Focus on paying it down aggressively. Building an emergency fund is also crucial. This is money set aside for unexpected costs, a car repair, a medical bill, or a job loss. It can manifest as a reluctance to talk about money, a feeling of guilt when spending, or a tendency to avoid financial matters altogether. This negative association creates emotional blocks that hinder wealth accumulation. 4. Keeping up with the Joneses. The pressure to compare ourselves to others is a common trap. Believing that true happiness comes from having the latest possessions or achieving a certain lifestyle is a recipe for financial stress. This leads to comparison and a constant pursuit of things we don't truly need, often resulting in financial procrastination to obtain these things. 5. Fear of risk. Sometimes, a deep-seated fear of losing money prevents us from making smart investments or pursuing entrepreneurial ventures. This fear can be rooted in past failures or a lack of financial education. This limiting belief stifles financial growth and prevents us from achieving financial independence. 6. Unworthiness of wealth. This belief is perhaps the most insidious. Starting with a diversified portfolio is a good approach. This means spreading your investments across different asset classes like stocks and bonds. Stocks offer the potential for higher returns, but they also come with higher risk. Bonds are generally considered less risky, but they also offer lower returns. Mutual funds and index funds are great options for beginners because they offer instant diversification. Consider your risk tolerance. How comfortable are you with the possibility of losing money? This will help you determine the right mix of assets for your portfolio. Understanding asset allocation is key to successful investing. It's about deciding how to divide your investments among different asset classes based on your goals and risk tolerance. Remember, compound interest is your friend. The earlier you start investing, the more time your money has to grow. This stage requires ongoing financial literacy and a willingness to learn about different investment strategies. The final stage is preservation. This is about protecting the wealth you've accumulated. as you get closer to retirement, you'll want to shift your focus from aggressive growth to wealth preservation. However, research suggests that the influence of societal conditioning and early attachment experiences on these patterns is still not fully understood, leaving a significant area for further exploration. If you found this helpful, please like, share, and subscribe for more videos on mindfulness, emotional health, and personal growth. And remember, you are worthy of peace, serenity, and contentment. Focus on building a life filled with purpose, meaning, and connection.